Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, September the 30th, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Still expecting this more than likely to break down, but the question is this new swing point low, or we need a little bit more upside first to make that lower high, lower low. Or is this the end and we're ready to go making a new low? Well, let's jump in. Just before I do, high-level overview. Wave 1 is done. We're working on a wave 2 down. We believe at some point this wave 2, Eric, is going to end. And we're going to get a breakout. And everybody's negative on the dollar. It's all that money printing and this, that, and the other. Trillions of dollars in debt. You know, it's all doom and gloom for the dollar, but at some point the dollar off of the correction will stop, and it is expected to go breaking a new high above that 114. Question is this the end? The other weeks I talked about this not likely being the low. Well, we got a slight lower low, so that part was correct. Well, is this now the end? We're ready to go breaking out, or do we continue to make lower highs, lower lows? Well, until price proves otherwise, we believe we will go lower. Question is, are we going to make it way down here to our 80 target, which we discussed that about 3 years ago? Well, jumping into the charting platform, we have some interesting developments. You remember a few weeks back when we did this beautiful ABC correction, we went up into the extension zone where we said we needed to reverse from. And if we were to reverse from there, come down and break the 618 area, we then would go on to make a new swing point low. We did that, right? So far, so good. Well, this most recent move, we were doing the same thing, saying, okay, well, is this another little three-wave correction? And we're ready to go breaking down. Well, now this time, I'd like to see that little lower high trend line get broken, right? We broke above, coming back to retest. This could set up, if this is going to bounce, we hold here, we make a run toward our box up here and the Magic Fibo up there. But if this continues to decline and we start closing below 97, from the low to the high, we start closing below 97, not a wick. We don't want to see a little wick down below. We want to see a candle body close below. But if we start closing below 97, then it's highest probability we're going to go down to the extension of 95.90, 95.60. I'm still leaning that way, but I'm just letting you know, what if we don't and we hold this? Then we're probably going to go run toward that 98.80, maybe up to 99 and change. Amen? If this is not the reversal, meaning this is not the low and we're ready to go blasting off and eventually go breaking out, and that wave 2 would be done, then even if we get this bounce, we should not go breaking above the Magic Fibo. Right? Magic Fibo is this big orange line, part of the MPA PE5 software, and you should not go breaking above that if we're going to go on to make new lows. The only other option is, what if we do go breaking it, but when we start correcting, we come back below this little swing point where we have that type of move, then it sets the tone, overlapping, that that's still corrective, and we're still likely to go low. So the only road to lead us to new highs would be for this thing to go ripping above here, have a modest retracement, and then a continuation. And even then, what if we get like a 5-wave? This clearly looks like a little 3-wave correction. And we go much lower, we're already overlapping, right? So if that's a 1, 2, 3, which looks very limited, and that 4 is already testing, so we go any little bit lower, then it kind of throws off the 1, 2, 3 scenario. This didn't go far enough. Typically, when you do a 1, 2, 3, you have to get above the 1618 extension. If you go A, B, C, then anything below the equal or A equals C, or we go up to as much as a 1272, which we did over here. That's exactly what we did over here. We went up and did a 1272, right? Well, just a little bit shy, above the 1448, just below the 1272. We did not break it. Then when we started coming back down, Harold, what did we do? We closed below that 97.90 over here. Even though we chopped for several days, we still ultimately made a new swing point low. So if this is another just smaller version of a 3-wave move, it looks more like one now. Like I was saying, if that's a 1, 2 going up in 3, that's an awfully shallow 3. And as we're coming back down, we're going back into the area of that original move. So that's still corrective. So at best, this is probably, if we do bounce from here, we're going to go up into this box. I just want to warn you. So euro dollar, pound dollar, etc. If we go bouncing, then the probability is we're going to go up to this 98, 80, 99 and change, make a run toward the Magic Fibo. Even if we do that, it still looks more downside, right? Ultimately, that would end up with a lower high. See it? Totally would end up with, even if we rally up in here, it's still at a lower high, and it's still below the daily Magic Fibo. FYI, there's a ton of shorts against the dollar. If we get a short squeeze, price has to break above 102. That's quite the move to get up there, but there are a ton, like the world is shorting the dollar. Big, big, big time shorting. Anything but the dollar trade is kind of the term from Goldman Sachs. I forgot the guy's name, but he announced anything but the dollar trade. That's what you should be doing. So if we see the dollar go ripping up to 102, this thing could really start spiking very quickly, because all the shorts up here in the pain, the short squeeze would come in around that 102. So just put that in the back of your mind, maybe a sticky note on your trading station somewhere. The dollar goes above 102, expect it to go soaring higher due to that short squeeze. But until then, could we get a little rally into the dollar here and still get a lower high and ultimately end up with a lower low? Yes, that is the plan. So I keep going back and forth. This, in my humble opinion, is not the end. I still think we're going to go lower. But at some point, the wave 2 will end here, lower, lower, somewhere between where we are and this 80 target is the plan. So up until price proves otherwise, meaning we see type of price action that warrants us to question when this is over. Zoom that way out. When this is over. And right now, there's no reason to believe this is the bottom reversal and this is the end of that wave two that we warranting going breaking out. First things first, as long as we're below the daily Magic Fibo, there's no way we're going breaking out. It is just not going to happen. So the question is, what if we spike up there and we get a big rejection wick and we actually, we're above the Magic Fibo, but we don't close above it. It doesn't count, right? Still below it. So what am I trying to get at? There's a chance that if this holds, this back test of that lower trend line, right there, lower highs, lower highs, lower highs, that lower high trend line, if that holds, then there's a good chance we're going to bounce and go up into this area and go up toward testing the Magic Fibo. All I can say is what I've been saying over here. Any big rally should be sold. Any rally should be sold. So if we do get that bounce into this zone, this is not the area to go long and look for the dollar to go ripping. This is the area after a bounce up there to look to sell it. Everybody good? Now, what if we just grunt, grind, laboring rise, we just kind of chop and grind and do, and we ultimately start to see us close, not a spike above, but a close above that 102 area, then by all means, I think that's a good place to go long because of all that shorting activity. And that short squeeze could make this thing just go popping quickly. So again, put a little sticky note, write that down. 102 is like the short area that would put a squeeze on everyone globally that's short the dollar, and that would put a big squeeze on them if we get to 102. All right, in the short term, any pop should be looked at as an opportunity to sell the rally, because I do believe staying below the Magic Fibo, staying below this resistance zone, even if this is the beginning of an A, B, and this is like a 1, 2, 3, 4, 5, and that ends up being the A, the B, and the C, that's proportionate, fine, but we're still looking for another push lower. Otherwise, if this is the end, and that wasn't quite equality, when you look at this low to that high to this higher low, the A move to equal C would have to go up about 98.80. We didn't go that far, but the rule is the rule. So Harold, from this low up to that high, we break 97. So put that in your, basically this prior swing point low, the same area. We close below that, just like when we did previously. When we closed below that 618 prior, it meant we'd make a new low. Well, here it is. Basically, it's this prior swing point here. If we break below that, you can see from my low to high, my 618 is right at that 97. So hint, 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 we close below 97. Great shorting opportunity to go down to 95.90, 95.60. Which again, from the prior low to high, we did close below that magic zone, which forced us to go down, but we never quite reached our targets. We came close, but no cigar. So you can see those two targets are still outstanding, and these overlap in the same area. So all roads would say if we start closing below 97, we're going down. As we like to say, down goes Frazier, down goes Frazier, down goes Frazier. So Emil, we close below 97. We're going to go down a point, point and a half, maybe more. It's almost a guarantee just based on price action. Now, if this holds and we go breaking out, I would not assume this means, this is the end of the road and this baby's going up and we're going ripping higher. No, this bounce and hold of this area where we tested, got rejected, broke out, retesting, that zone, back trend line there, if that holds, then a pop, what does that look like? up toward 98.80, maybe 96 and change, 99 and change. 98.80, 99 and change, but I'm still looking for this to go at most. And because this is kind of sloping in a downward direction, maybe we run into the magic Fibo, then we get rejected. All I can say is the plan, if this pops up there, is look to sell it like last time. Amen? Quick reversal, and then ultimately made a new low. Is this going to do more of the same, or is this already the end and we break below? So A, close below 97, great shorting opportunity. B, we pop into the zone up here, another great shorting opportunity. Because the likelihood this is ready to go blasting off, extremely low probability, and as long as we're below the magic Fibo, all roads lead to further downside. Amen? All right. Why is that important? Because when you know where the dollar is going, you know where currencies are going, you know where a lot of asset classes are going. And the dollar is coordinated and correlated when it is, and it's not when it's not. But you get the idea. Let me move this. I don't know what happened to my, let me go to 3-day, get that back in. What's on here? We have something stopping my stretch. Oh, that's what it is. That guy needs to be removed. There we go. Now, yeah, thought so. All righty. So, is the euro likely ready to go breaking out after another little three-wave correction, or is this going to end up in another lower high, lower low? Well, it's going to do the inverse of what the dollar does. If the dollar holds that back trend line and goes bouncing up toward that 98, 99, then this is going to go breaking new lows and get a little deeper retracement toward the 116, 115 area. Emil, what if that happened? What if this is just the beginning and we get one more push down in here? That's a good buying opportunity. Right? Dollar goes up to that pink box, the euro goes to the green box. We look to buy the dip, sell the rally on the dollar, buy the dip on the euro dollar. If not, and the dollar continues to break down, this will continue to break out. Well, where does that leave us? Well, we can use the most recent move, and that is 3-point tool from the recent high to this current low. We need to get above 118 to kind of set the tone. 118, 118.50. That's my 618, 786 zone. If that happens, we see us close above 118 and change, 118.50. Then we got a 100 to 130 point move coming. I like it, right? You know, Forex, trade standard lots, $10 per pip. That's a good 1,500, roughly. $1,000 to $1,500 move. Not too shabby on one lot. I like it. Up and until then, could we fizzle and go lower? Absolutely. So if that happens, what am I going to do? I'm going to buy the dip. Fair enough? All right, well, look at the software. What would that look like if the euro does that exactly? Notice when we reversed here, we didn't quite finish the cycle. Red, blue, and green made a move. Red and blue came down near the oversold area. Money flow right there was a little shy. So Emil, what does that look like? A little engage, disengage, or a slingshot up to a slingshot down so that the cycle could continue. That's why I'm letting you know more than likely that's going to happen. Why? Weekly gave us a PAI hook and a trend momentum cross. We got a PAI hook, red, blue, and green, turned down. We got a trend momentum cross, green below the red. We have a little bit of slope. We have a little bit of angle and separation. So that's kind of telling us we may get, as the weekly continues to depressurize for another slingshot higher, this may push a little lower, allowing that daily to go ahead and engage, disengage, What if that happens? What if the dollar holds that and we go bouncing toward that 99, 98, 80, 99 and change, and this baby disengages? Then what do? Simple. We go in here and we tell the system to buy the dip, and I can automatically set this to buy the next trigger higher like we did here and made hundreds of pips, reached our targets, and then boom, we got a pullback. So if this fails, we make another little grind lower, and this ultimately gets to oversold. What are we going to do? Buy the PAI hook. Got it? So this is how the software is going to look like. And more than likely, if the dollar holds and doesn't break down, then this is going to reverse and go lower. The dollar pops higher, this goes lower, and that goes into salivate country. Should this engage, disengage, or go from a slingshot up to a slingshot down? Basically, if we see this sell off and we start pushing lower, when this gets oversold, like over there, and we trigger higher, a little trigger, then it'll automatically enter your trade like the last time when we made hundreds of pips there. Got it? And the time before that, and the time before that, and when we bottomed here at 102, and 3+ years ago when we talked about that. On this one, monthly, weekly, daily, we talked about this being a huge opportunity, that we expected a big correction coming over the next several years, that this would result in thousands of pips. And so far, we've been spot on, right? Rinse and repeat, rinse and repeat. And I'm still long in a lot of my accounts this because I expect that to go higher. And short term, we get the dips we buy and even some sell-offs, as we talked about, coming back down to 102, bouncing from there. That was a beautiful move up. And most recently, this little pullback to where we reached our targets. And then we got another little pullback. So yes, the monthly's in overbought territory. The weekly's turning over. That's part of the potential correction going a little further as we go to the weekly. And this could depressurize a little bit more, but what are we expecting? Weekly to slingshot higher, monthly to slingshot higher, and the dollar continues to break down, the euro continues to go higher. Fair enough? So in closing on the euro, be careful. If you bought this little daily reversal / 4-hour, trigger higher, beautiful. Be in a position of authority. I keep saying it, but once I'm in a position of authority, I bank profits. And if the markets do flip back and we go lower, then it just pips me out for more profit. So what if this thing turns over, comes back down, the daily continues to go to oversold, we get the dip, then I have my 4-hour daily back oversold, we get a PAI hook, I buy the dip again. Fair enough? All righty. So no guarantee that this is going to make a new low. I'm just telling you if it does, based on the daily not finishing the cycle with the weekly hooking and crossing, there's a pretty good chance this is probably going to fizzle, come lower, drift lower, perfect opportunity to rebuy that dip. What about the pound? It's basically doing the same. Got a nice bounce. We came down to the support zone we were looking for, bounced beautifully, up a few hundred pips already from this 133 up to 130, about 150, 133 to 134.50. Be in a position of authority on this one. If the dollar continues to rally, this is going to turn back down. It's that easy, right? So that's why we spend so much time looking at the dollar index. So Emil, what if the dollar goes bouncing off of that trend line and it goes up toward that 98.80, 99 and change? This is going to turn back down and retest the Magic Fibo. Maybe we come a little bit lower to then bounce. Well, it basically did the similar type of move looking at the software where we go over to the pound over here. And this daily did reach oversold where the euro did not. So what could possibly happen here? This daily goes up, does a little slingshot lower. This finishes the cycle. Then we turn and go back up, kind of like we did over here the last time. Daily got oversold, turned up. We were waiting for the euro to get oversold. And then the pound slingshotted lower, got a new little low. And at this point, at that juncture here, both the euro and the pound dailies were oversold together, and both turned and hooked, and we got the big run up off of that, right? A few hundred pips, a little correction, another few hundred pips, but it was a nice move. Fair enough? All righty. So worst case scenario, Harold, James, Ian, Eric, we get a little slingshot lower because the dollar pops to run to that zone. This baby comes back and retests a little bit lower. When this would do this scenario, I'm just saying if it did that and we got it back down oversold, this continues to push and then it hooks again, buy it. So what if I see the dollar start popping up like we're talking about and I see this start coming back down? Then I'm going to go over here to my trade management system and automatically set it to go. Go on Expert Advisor, Properties, set your stop loss, take profits where you want them. And then you go in here and all you want to do is take a trigger long. True. That's all I'm interested in. Especially if we get this thing to fizzle and sell off. We get that trigger long. Got it? And then you let it sit in ready to trade mode. All you got to do is click it, ready to trade mode, and it's good to go. All righty. Let's continue and finish up with the dollar index. So just rinse and repeat. What are we potentially looking for? If this holds and we pop up here, that euro and pound are going to set up a beautiful opportunity to buy the dip, and this dollar would set up a nice opportunity to sell the rally. If we don't hold, there's no reason we have to go up here, right? No reason we have to. If we start closing below 97 down here, then the writing's on the wall that that is over. So here's your magical level to watch, that 97, which ties in with the prior swing point over here. If we start closing below a candle body, not a wick, then expect more downside. Amen? That's simple. So if that happens and we see this close below here, expecting more downside on the euro, means the euro and pound dollar, euro dollar, pound dollar, are going to continue to go higher. If this bounces, the euro and the pound are going to pull back, and this would set up a great selling opportunity from up here, looking for a push lower. So I don't have to tell you that this has to go bouncing. It does not. Price is telling us if we close below 97, we're going lower. It doesn't mean as soon as it closes below 97, it just goes straight down, nothing but red candle, red candle, red candle, and immediately goes straight down. But it could stair step its way down there in the next few days or week or so. But that's the key. All right, let's continue. So not only do we have a ton of shorts globally shorting the dollar, but let's look at the markets over here. ES. Remember I told you there's a lot of play out there with options. And one big player I noticed yesterday, everybody knows it, VIX. Our good friend VIX. When the markets go tanking, VIX goes soaring. Right? When the markets go tanking, VIX goes soaring. When was the last time we had a big soar on VIX? Remember the tariff talk when the markets plummeted down during April and the world was ending? The tariffs are going to destroy this country. It's the worst thing possible for everything, everyone involved. The tariffs are terrible. Well, look what VIX did. It went from about 17 up to 60. Big pop. Well, guess what I saw yesterday? over $12 million of call options being bought on VIX to go up to 32. You're in a 32 range right up in that zone. But that was the 32 call options. They spent $12 million, Emil. That's like 155,000 contracts or something insane. But it was like $12 million that somebody, is it a hedge for the markets to potentially, if it continues to go higher, they're just hedging the bet in case we get a Elizabeth, I'm coming to join you, and it crashes? Or do they know something we don't, and they know that the markets are going to go tumbling soon, and this baby's going to go spiking up to around 32, right? No buy, sell to hold. Purpose of this class is for educational purposes. To be educational, informational, and fun. If you need a certified financial planner, you should seek out the advice of your financial planner. That's not my job. My job is to tell you where the markets are going. But that's something that's interesting, that they're betting that much on VIX. What happens to ES when VIX goes spiking? Obviously, our markets go tanking, right? In April, when the markets just kept going lower and lower, we talked about the big correction coming, and it happened. The blame was because of the so-called tariffs, but that's when VIX can spike. So knowing there's $12 million of call options, that's just premium paid for call options for the 32, which would be right around there, just above 30, $32. So if this thing goes popping to 32, what's a good way to play it? A, you can buy call options like the big money did and risk some money. Worst case scenario, it doesn't happen, that expires worthless. So whatever you spend on that call option is basically burned to dust, goes nowhere. But if you get a spike and you're buying out of the money call options and they get into the money, then it can make significant chunk of change should this thing go spiking up again like it did in April. Fair enough? What's another way we could play VIX without playing VIX itself? There is UVXY, and now you're cooking with some real grease here. And UVXY is ultra, which means it's 2x. Whenever you see ultra in that example like this, that means it's 2x. So let me actually do it on both of these. There's ultra, and let me go to VIX here. I'll get to the ES in a second. But here's VIX, here's the other. So what if, for example, and let me bring this down, what if we actually get that move where VIX goes ripping towards 32? That would be almost 100%, 96, 97 in that 32 range, because we're in a 16 range, almost 100% run. Let's just make easy math. Emil, what if we get into the money and we go into that 32 price range? That's going to put us right around that 100%, just double, right? Well, if VIX is going to double, what does that say UVXY is going to do? It should do a 200% gain, and a 200% gain puts us up here in the 30s, right around that $30 range, $32, roughly about $32. Got it? So now we're talking from $10 to $30, triple in price roughly. Now, typically you can just buy shares of this, right? Only $10. Buy some shares, and if by year end we get that big VIX spike and we see that big 32 call options on VIX pay off big, then the markets go down, this baby goes ripping higher. If VIX goes, this baby going to go times 2. So there's a way we could play this. There are options available. I don't necessarily always recommend, but when you feel the need for speed and you not only want to do a 2x leverage product, but then you do options on a 2x leverage, typically that's like dousing yourself in gasoline and playing with matches, that if this thing goes spiking, man, you could do call options on this. And it's roughly, as I was looking at earlier, you can buy like the 15-16 call option, and it's roughly like $1, something like that. Or if you think it's going to spike up the majority of this, maybe you do a put spread, a call spread, and we buy, say, the 12 call and sell the 27, $15 spread. You spend like 50 cents on that. When you buy one, sell one, it's like a 50 cents obligation per contract. So it'd be $50, right? Everybody with me? And if it runs up all the way to the 27 call option up here at the top of that spread, then we can make, based on that, 27 minus the 12. That's the sell the 27, buy the 12. And again, I'm not telling you what to do. This is just ways to play. The potential of $12 million in call options on VIX, but you could buy the 12, sell the 27, net, I think it was like 50 cents was I was looking at it earlier. And if it moves up into 27, it caps the most you can earn, but you take the 27, so I'll do a little math over here for you. You take the 27, you subtract the 12, that's a 15-point move, right? 15 points. And you're going to spend basically $1 minus that. So you have the chance to spend basically with that. You spend $1 to make 14x. So I spend $1 to make 14. That's not bad. Risk $1 to potentially make 14. Well, if you don't want to do the spread to limit the cap, if it's going to go ripping, maybe that's your lottery ticket, and just buy straight up. Maybe I think when I was looking at the 15 call option, no, maybe it was the 12 to 15, maybe it's 15. Somewhere in that 15 to 16 call option was like $1 and change. $1.08, $1.18, 15, 16. And if this baby goes popping, instead of cutting you off at 27, and this thing goes all the way to 30 plus, which would be the 200%, then you can max out and there is no cap on it. So there's a way that if you want to hedge that bet of $12 million and VIX goes spiking, VIX does, this is going to do twice theoretically what VIX does. And that's a way to play that. Let's see if I can pull that up. Let's see if it'll show it. More seasonals, options. Okay, here it is. Let me get that out of the way. Let's see, show all. And let's go to that 15. And we want to go out to, I want to go further out. Here we go. Let's go out, say maybe November. Give it time. This is going in October. We'll go with November expiration, or maybe even December. Well, let's look at November. That 15 is running right around that dollar, 15, 16, $7, $16. Everybody see it? So Emil, that would give us the next 45 days for us to get that push lower. And that ties in. Let me go over here and let me double check that on VIX. Go over here and see exactly how far they went out on that $12 million. Come down here to, anyway, I'll reconfirm that for you when I open up my other platform, but I thought this would allow me to go there. Let's see if I do it just this way from this view, and More on options. It shows up there, but not on VIX. Interesting. Did I overlook it? Seasonal, technicals, more technicals. Oh, for whatever reason, it's not showing it. Let me refresh that. Maybe that'll do something for us. No. Oh, well. Anyway, there's 12 million on VIX to go higher. And as you can see on this, we could potentially buy out to, and that was November. What if we go to December? It'll be a little bit more expensive, but that 15 call option is more like $1.60 to $1.90. Gives you a little bit more time. But the big bulk of the VIX, I believe, was out to November, if my memory serves right. But I'll double check that for you. Just FYI, that's something we could potentially look for an opportunity. And if VIX goes spiking because our markets go take a dip, maybe it's the status of going into next month. We have FOMC. Maybe it's FOMC that we don't cut rates again or something around those lines that stirs the markets to get a big sell-off, and that baby goes spiking into October. Amen? But that's why I was pushing out to November to get past the next FOMC, October the 29th, I believe it is. All right, so let's go to ES. Where is that leaving us with the markets? Well, we're testing some important areas. From the recent move, when we reached our extensions, we got a pullback, kind of warned you about, and this latest pop. Harold, look, we went right to that 618786 zone, the wick where we closed, right at that zone, and we're testing it again today. Could this be the move of an A, B, and we get another push lower in C for us to push lower? Be careful. Still thinking we're going to get more blow off top before we're done, but we also could get a much bigger correction coming before that, right? Remember, seasonality in October starts to see a little bit of a pullback based on seasonality, that is. So could this be the beginning of that ABC and we push a little bit lower? Or Harold, what's some targets if we think we're going to go lower? Well, that's a beautiful reason to use the 3-point tool right there. Actually, it's off your screen, isn't it? 3-point tool, there it is. 3-point tool. And you go from the high right there to the low to the lower high. So what would we be targeting if we start breaking down because we got rejected out of this zone and we break down? 63, 65.80, maybe 65.60 area, kind of tying in with this over here. So if this is the case and this rally fizzles and we do get another push lower, this would be my target, 6,600 down to about 65.60. Got it? What if it doesn't work out that way? Well, let's go to a smaller time frame and look at the prior high to low off of that latest move. And we do the same type of thing with a 2-point tool. We had this prior high. We came down to this recent low, all double bottom pretty much there, either one. In order for us to get bullish short term, we got to break above that 67.20. Critical level. If you see ES close above 67.20, then it's a great opportunity to go long and shoot for 67.40, 67.48. See it? But if not, we don't hold this prior zone, which is like a battle zone. Former resistance, temporary support, back to resistance, resistance, back to support. back to support, 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 support. So either we go breaking above and close above 67.20, then it's set for us to go about 20 points or so higher, shooting for 67.40, 67.48, which would push us to that new high right there. If not, and we start closing below this little battle zone, then it kind of sets the tone for that 6,600 we just discussed, based on that bigger picture, shooting for that move lower. Amen? So when I look at the bigger picture, the prior high to low, and these don't line up perfectly, but as I reestablish them on this lower time frame, you can see the same, that if this is the high, that's the low, and this is the lower high, then this would be my downside target. So we start to see a close below 6,700. Give it a little wiggle room here. We start closing below 6,700, then the likelihood we're going to go about 100 points down looks like a hot opportunity on the short side. If not, we just keep holding and grinding, because overnight we grinded higher. We're pulling back, just kind of testing that zone. So what happens? We break above 67.20, then the scale is tipped for us to go on towards 67.40, 67.48, maybe up towards 67.60. Amen? And once we start getting up there, off of the bigger move, it then opens the door to 67.75, 67.90, even 6,800. I do believe we're going to go up here. The question is this part of that A, B, C, and we come lower first before going up there, or is this part of that bounce and retrace, and we're still looking for these upper targets? The other option is, let me remove these now, is to go in from the recent low up to the current high and watch this support zone right here. This is very important. That's 66.80 to 66.68. That's my, actually, no, it's this one below, sorry. It's the 66.49, basically 66.50 up to 66.68. So where would this thing, if it breaks the support zone, where's it going looking? It's going to look for support down here. So short-term trade, we close below 67, we could shoot for 66.70, 66.68, 66.70. About a 30-point move. Amen? We don't hold this box, then by all means, we're going to go seeking out these lower numbers. Fair enough? If we hold and we break above 67.20, this is what you call compress and compact the channels. Now we use Fibonacci's to give us targets when the channels finally break and we have price action telling us what to do. These would be the targets you shoot for. And if we start closing and reaching these targets, which would be off of that high to low, breaking this pink box, then again, we start continuation, 67.75, 67.90, potentially continuing towards 6,800. So what's it going to be? I'm very cautious, extremely cautious. Amen? Well, let's look at it down and drill down so you get like, wow, I've never seen anybody go this deep on one little move. What's the other? This kind of looks like a three-wave move in here, right? And if you use your 3-point tool, and we say from this low up to that high, up to that higher low, we didn't quite get to that extension, but we're awfully close to it, which means this is looking much more like an ABC, right? ABC. So this could be the move lower. I'm leaning a little bit more downside than I am upside because of the parameter of that move. Now look at NASDAQ, for example. This one is a little bit different. This one, if you look at the low up to the high, up to the, whoop, that was a 2.2. I want to use a 3.2. 1 second. 3.2. This low up to that high, up to this higher low, we've extended it. We actually poked above the 1272. We didn't reach the 1618, but this thing is different than the ES. ES in that same move stopped and didn't reach quite the even move. It certainly didn't go up and break the 1272 like NASDAQ did. So do you think NASDAQ with the big dogs is just going to keep the markets grinding higher and we're going to just go breaking out, shoot for new extensions? Well, what's the key level on that move? On this bigger move, we already broke that 618786. So NASDAQ is different than ES because we took that level out where ES did not. And we did close above this. This is on a 15-minute. So what I like to see is a close above that on a daily, obviously. Let me zoom that in for you. But we're right in that zone. So if we can get a daily candle body to go above that 24.9, then game on for 25.119, 25.196. It's still rejected in here because it went up and it rejected and it's still testing. But if we can clear that hurdle of that 24.9, so if the NQ closes above 24.9, probability we're going up another 100 to 200 points looks extremely high probability. Right? Well, what if this is the same because this one is more bullish looking than ES and we don't and we end up pushing lower, then you would use the 3.2 the opposite direction and say, well, this is my high and that's my low and that's my lower high. What would I shoot for if we reverse? We'd come down here to your 24.3, 24, say 3, say 24.4, 24.3 area. This one looks more bullish. This one looks more bearish because it didn't break above and it got rejected. So that's why all eyes, I like to do broad swap of the markets, which ES is kind of your broad move. NASDAQ is the big tech, but I like to see both in agreement. And right now, technically, they're a little bit different. Amen? So just coming back over here to show you what that looks like. This one tried to break that all-important zone, but got rejected. And so far, it's questionable, right? So if we go breaking above 67.20, then it's game on to go higher, and that means NASDAQ is going to do the same, and we would start targeting above at our 25.119, 25.196, target 1, target 2. ES closes above that 67.20, sets the tone for us to go towards 67.42, 67.48. And again, if that ends up where we do go breaking out, then we can see off of this recent move, I think I just took it off a second ago, from that high to this low, we take this out, not only shorter term target, but longer term target 67.76, 67.90. Fair enough? So force price to prove itself. NASDAQ wants me to believe that we're going higher. And if we close above 67.20, then that's what ES is going to tell us. The same type of move going higher. If not, and we get this to come back down, we start closing below that 6,700. Then we start talking about, 6,600. We start talking about that move lower here. Fair enough. What about Russell? Russell's looking a little bit different as well. From the recent high to low, we didn't quite test that 618786 zone, and this looks like it's going to do a little ABC here. So what would the target for the Russell be if you're trading that, or IWM? From the high to the low to the lower high, put us around 2370, 2350 area. So my target zone would be down here. And this is looking more anemic than both the ES and, of course, NASDAQ. We did rally up here, but we failed to break and breach where the ES tried, but hadn't done it yet. NASDAQ tried and actually is right in that zone. This one didn't even reach it. So a little something different going on here. So what's the probability looking like this? That this is the A, that is my B, and this would be the C coming down somewhere around that 2370, 2350 for that wave C. It's looking good. When is my conversion point to kind of say, yep, the inevitable is here? Well, you look at the recent low. I don't want to wear you out technically, but this is quick and easy to do, and put those levels. So we start closing below 2400, 2430, but 24 area. That's my 612430, 2424. We start closing below this support zone. Then it's game on for us to break lower, targeting 2400, 2397, as we were talking about breaking lower. Amen? Any questions? So be careful on this one. I think we're more likely to break down. Is this going to pull us all down? Well, my kind of barometer is the Nikkei. And Nikkei is global liquidity. Like, what does the Nikkei have to do with whether IWM, NASDAQ, and ES breaks out or breaks down? Well, typically, global liquidity gives us insight. And if global liquidity is going to start to shrivel and decline, then it's likely going to pull our markets down with it. And this, as we thought it was going to break out, but hadn't gone anywhere in days now, it's pulling back, and it's probably going to head and retest this breakout. So, should this continue to decline, I think it's going to pull ES down, it's going to pull NASDAQ down, and it's going to pull the IWM down. If this thing holds and we go breaking back out, start pushing toward 48, and my target up here, 48.52, kind of singling out 50 up there, then that's when we get that blow off top with our markets. Risk on, risk off. Global liquidity is shrinking. I don't see ES, IWM, NASDAQ breaking out. So do we follow NASDAQ's looking like it's going to be bullish and want to go higher? Or do we feel more a little bearish with ES because it hasn't done what NASDAQ has done? It didn't close above. The wick was above, but it didn't close. NASDAQ, we did get a wick, but you can see closely that we did actually get a candle body close above that level of 24.8. See it? We closed at 24.836. So this one is bullish. ES is more bearish because it was unable to close above that level. I'm going to pull this across, kind of tested it, and we close right at it. And we test it, we're still below it. IWM is nowhere near that retracement, like I showed you with Russell here, nowhere near it on the upside, much less trying to close up here. We didn't even wick up there. So is this going to break down? This is the support zone to watch. If we break that area, then we're going to go lower. And if we see Nikkei do the same and come back and retest the breakout, and we shrivel up some of our global liquidity, then that leads us with a chance it could come down to 44 area, 43.99, 44, come back and retest that. If we don't hold this, right, we come back and retest and then pop, then our markets will buy the dip and go breaking new highs. If this thing comes down here and doesn't hold and breaks down, then we could come all the way back toward the Magic Fibo, which is sloping upwards. So maybe it kind of churns for days and we come down here. That could be that October pullback that seasonality likes to see. Amen? So right now I'm waiting for the markets to give me actual direction. Price proves the intentions. We close above those resistance levels, we know our targets to the upside. We don't hold support levels, we kind of know our targets to the downside. Pretty simple. Amen? Any questions? Any questions on that? So let's repeat. ES is in danger zone of failing, in danger zone of committing a ABC correction. So up and until we break above 67.20, no reason to believe this thing's ready to go breaking out. Amen? We know the upside targets. In the short term, we need to see this support zone be taken out. So we need to close below 6,700 to kind of give us insight that we're probably going to go down and test at 66.70, maybe down to 66.50. But we have to close below this level in order to set the tone for lower. And in order for us to set the tone to go higher, we have to close above that 67.20. Fair enough? Up and until then, if you're doing anything in here, I'd be very quick to take profits, waiting for direction. Is that the A, B, C that we need first? Then we buy the dip. Or is this just part of that bigger move up, correction, and we're bouncing the continuation? Force price to prove itself. And I got to get above here to go long, below there to go short. Otherwise, ping pong, quick draw McGraw. Fair enough? NASDAQ, same thing. We're in the resistance zone. We're testing it. But if we start breaking below the swing point low, which we got overnight, and we see this close below there, then look for more downside. We see it close above there. We look for more upside. In the interim, be quick draw McGraw and be sure you're in a position of authority. Fair enough? Because again, that bigger picture is that bigger degree resistance zone from all-time highs to this recent correction low. We're stuck right in the middle of it. And even the most recent one, right? This is what you can continue to rinse and repeat. And you'll see how this overlaps again. That from the recent high to this recent low, we still got to get above this 24.8 to 24.9, 24.880, 24.922. So I will fix this box to fit to the most current price, recent price action. And that would be my 618786 zone right there. So Harold, is this potentially an A, B, C? Yeah. This could be the A. This could be rally in here and fizzle. And then we get yet another push lower off the most recent price action. What if that happens? 3-point tool. High, low. And let's say we run up into this zone, lower high. That would put us down here about 24,636, 24,6, 25, 4, 560, 570. Otherwise, we clear this box, we're going higher. 25, 25.44. The difference is, here's our all-time high on this one. Lower high. So far, lower high. So this is why I'm very cautious. Amen? Even though from that high to that low, we did close above that 618786. So I do think these targets are definitely in play, but we could get a bigger correction first to set the tone before we get up there. So these targets will come into pass. I think so. My humble opinion, we will reach a blow-off top, which is further up the food chain by the end of the year. Remember that Santa Claus rally? The question is this part of a bigger correction? Or what if, William Bruce, this much bigger move, most recently from all-time highs down to that low, and we get a B, and that's the A. This is the B, and then we get a C coming down. Well, that's why I continue to use these tools. And we say, well, what if this is the bigger move? Well, that would be from the all-time high down to this recent low to this lower high. Then this sets the tone for us to come down towards this target of 24.3, 24.2. Got a lot of these on here, so let me just remove them all, and you'll see this clearly. I got kind of too many on here. All right, this is just off the 15-minute. Let's go to the daily to get that bigger picture. So you can kind of see, what is this thing actually doing? Big picture, small picture. Well, remember, this still is testing a very important zone, which we're not quite there yet, 618786 off of that, but let's do it off of this bigger move on the daily and do the same. High to low, 618, looks like we closed above. So this is why I keep telling you this 25.1, 25.2 area is a high probability target. The question is, do we get the bigger correction first to come down before we get up there? Amen? So up and until NASDAQ clears this hurdle, then it's game on to these targets. Absolutely. If we fail and we start closing below and we get a bigger pullback, then this is going to be salivate country down here. And that would be that 3-point tool that I already took off. But if we end up doing that bigger correction, which October says we may, right? Rinse and repeat, then that would put us down here about 24.3, 24.2 area, maybe 24, maxing it out. A, B, C. Then we still go along targeting those. That could be over 1,000-point move from 24,000 to 25 as we start marching into the Santa Claus rally. Any questions? Tesla. How about Tesla? Do we need a little bit of a pullback? How accurate was this when we talked about Look for Tesla to go breaking out. And if we break above that 368 zone, we're going to 450. Huh. Remember that comment? We break 368, we're going to 450. Where did we go? 450.98. Not too shabby. And I said that 450 might be a little bit of resistance. So far, so good. So far, so good. What I also like about this bigger move is by breaking that 368, set us up for a run toward 450, which we did. But it also shows we closed above the 618,786. So how any dips on Mr. Tesla should be bought. Speaking of option activity, let's see if I can pull that one up. Let me move this out of your way, put that over there. And let's go to option activity on this guy. And there's been a ton of buying, more on options. There's been an absolute ton, other than VIX, most call activity has been on Mr. Tesla, right? Let's go out to November 21, for example, and come down here to our 500 call area, where we are. Here's 500. Look at that open interest. 1,900 contracts. Let's go to 600, 1,200. Let's go to 700. Not too many there. And let's go out to 880. So that's just current. Now let's push this out further. November. Let's look at December. Tesla, 500 called. 800 contracts at $28 per contract. That's a lot of money, right? And continue. Let's go to 600, 236 of them. Look at that at 630, 2,530 contracts, 640, 2,509 contracts. That's a lot of money. Keep going. 1,500 at $800 target. Somebody's believing in the man, right? 940, 6,000 contract. 960, 11,000 contracts. Talk about some major call buying. Right? There's only $1 to go to 960, and they're betting 11,950 contracts. Wow. Look at those numbers. Isn't that shocking? Somebody's betting big on Mr. Tesla. Let's go out to January. Will it show it to me? Come on. February, January? I'm not going to. Oh, it just took a minute. Nope, cancel. Just took a minute. All right, let's go out to January. And we go down here to $500, 670 contracts. Look at the price of that. 35 plus dollar per contract times 674. That's a lot of money. That is a lot of money out there. 600, 773, 700, 800. Let's go down here to 960, 300 plus out to 960. But if you start adding all that up, Emil, that is a lot of thousands upon thousands, which tallies millions of dollars that people were betting on Tesla basically by year end to go ballistic. There's December again. And look at these contracts down here. That is what? That's like 20,000 plus contracts for Tesla to get between 940 and 960. 20,000 of them out to December. And then as you keep going lower, another 1,500, kind of the big roundabout numbers, 98. But you can see the number 640, 630. That's kind of our sweet spot that we're thinking about. Where do those numbers come in? Close that, go back to this, 560, then the 630, 660 area. Kind of ties in with the exponential Fibonacci's there. 8, 900, 940, etc. See, those are some extension levels up here. Why they keep putting those numbers? Insane, isn't it? 20,000 contract by December to go out to 900 plus bucks. They think this thing is going to overachieve and get us up there by year end. Amen. So how am I playing? TSLL. I'm all over TSLL. We're looking for this thing to go shooting. Well, if Tesla goes toward the $500-$600 range, we're probably going to be upwards of the $40+ double on this. And what if Tesla does that exact thing that some of these people are betting heavily on, 20,000 contracts on? Let me move that. Let's just get an idea what that would look like. Remove. And we use this guy right here. And Tesla, from where we currently are, roughly in this area, and we go up to 900, I think 940. Let's just split the difference, 940 right there. You're talking good 115% from where we are to get up to there, good 115%. What does that do to TSLL? Well, that puts us at, what did I say that was? 140. So that would be 280, 300%, 280 or so. And that needs to be moved. Whoops, that needs to be moved from where we are to where we currently are. So that would put us somewhere around 240%, about $73. And we're at 20. Wow. Those extensions. Amen. Now, I'm not trying to tell you buy TSLL today, Ian, at $20, and I guarantee it's going to be up here at $70 by year end. Can't say that. That's why my targets are conservative in nature. But someone is betting the farm on Tesla not only getting to our original targets, that 600 to 700 range, but potentially could go ripping up into the 900 zone. And look at where that brings us. Astronomical numbers. Fair enough. So no buy, sell, or hold recommendation. I definitely own some TSLL stock, and I'm not doing anything. We get a big pullback. Let's say we get the markets to pull back in October, and this baby goes dipping, which is fine. Buy the dip. There's way too much money out there on options. Somebody's betting the farm on Mr. Tesla's ability to push this. Maybe it's the robo-taxis picking up steam by year end. It could be the delivery. And here in Texas, there are tons of cars. And they're even sending robo-taxis 24/7 for people to pick up their new cars. So that 24 hours a day, they'll send a robo-taxi or a robo-cab to come pick you up, so to come get your new car. Lots and lots, there's thousands of them on that lot. It's incredible how many's out there. So could this surprise to the upside October 15th? Maybe we could ride the wave until October 15th with all those call options coming. As we start moving closer and closer to earnings, you typically get a little run on that. But needless to say, Tesla broke out, went exactly where we expected it to go to find a little resistance. And so far, that's what we're seeing. So I'll zoom way in for you. We went up to that 450 target and we're finding a little bit of resistance, but I'm looking for an opportunity to buy the dip. So TSLL gives us a nice little pullback. Tesla pulls back, TSLL will, and I'll use that as an opportunity to add more shares. Remember, nowadays you can buy 1 share, 2 shares, 3 shares. I can buy one at 9 o'clock, one at 10 o'clock, one at 11 o'clock, one at 12 o'clock. Market's open, keep buying one. There's no fees to buy stocks. So I can buy 1, buy 10, buy 50, whatever. And the more we dip, the more I become interested, because just imagine if Tesla goes to where some of these people are betting huge, 500, 600, likely we can get to 500, pretty much a foregone conclusion. And I kind of moved my numbers when I kind of slid that a little bit. But, that's easy numbers. That's why I was talking 600 is kind of my target zone. 6 to 700 is the sweet spot. If it overachieves, then you got your 8, 900, which there are a lot of options here, a lot of options there, as you saw. And where does that put TSLL? Well, remember what we've been through and where we've gone. Last October, I talked about this opportunity. Tesla was due to go to 500, went to like 490 or whatever it was, and just missed it. And this baby went from below $10 up to $41. So Tesla's making its run again. And this baby is going to start cooking and ripping to the upside as Tesla starts breaking out above. When we start breaking that 480 area, which is go to weekly, we go to higher time frame. Where's that leading us to? 6, 8, maybe 9. But that's why I think we're definitely going to go toward that 600 to 700 range is where I'm thinking by year end. And that should put TSLL up in the stratosphere. And we're not even to the fun part yet, Emil. We need to break above 28 bucks up here. We're not there yet. But when we start closing above 28, why 28? From the recent high to low, that is the 618 magical level. So we start closing above 28, then it says we have a 75% chance we're going to 46.60, 70 plus we're going to 51. Amen? And what if Tesla goes popping 700 or higher? Can't imagine we're not sitting at 63 or more. Got it? So again, no buy, sell to hold. Any dips, in my humble opinion, should be bought. And I'm looking for Mr. TSLL to go ripping higher in the days, weeks, and months to come. Fair enough? All righty. What about black gold Texas tea? Dan, I kind of warned you about this. Any rally should be sold on black gold. And this is the weekly chart. But after this pop and retracement, we're still screaming we're going down. So once we take out 60 bucks, that's a good shorting opportunity for us to start seeking out 54, 52, 50. Any questions? So, daily chart. Everybody likes the daily. We're still in this zone. We've been stuck in this zone, right? We took out the 618 multiple times. We just haven't taken out the $60, which is the 786. But that's where those numbers come in, 51.49, basically 52.49. That's why I think we're headed there, but we still got to take the floor out. We've tested it multiple times. We come down, we bounce, we come down, we bounce, we come down, we bounce, we come down, we bounce. So I'm not trying to tell you short, 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 go short, down goes Frazier. That's why I want to clear this hurdle. And once we do, by all means, I think this is a great opportunity. We close below 60. We're headed to new lows, which is 55. And we're likely going to target that 52, then 50. Got it? That's what we're targeting. We close below 60. We got about an $8 journey to $10 journey, pretty highest probability. And I don't mean we close below 60, Eric, that we get a red candle, red candle, red candle, red candle, and a couple of days later it just dips down in there. I think that's definitely where we're headed, and it could stair step its way down and take weeks to get down there. But until then, we have been stuck. There's our big support zone. The Magic Fibo basically up here is the big rejection zone. We've tested it. This is a prime example where we broke below the Magic Fibo, retested, and more downside. Any questions? So any rally should be sold. Once we take out 60, we're going to 50, 52, then 50, highest probability. And remember this story. This goes back to April or May of 23 over here, that low. What did we see off of that low? We saw a pop, chop, and a run, then a big dip, run to lower high, dip, run to lower high, dip. And remember during this period when we saw all this, I kept saying all of these lower highs, all of this chopping, overlapping price action is screaming, we need a new swing point low. I said it for months. We finally got it. And notice from this low, this chop, pop, dip, lower high, dip, lower high, dip, lower high, one last pop, then we went to a new lower low. Well, look at most recent price action. It looks identical to that. We got the low, we pop, we chop, then we went popping, then we got a dip, then we popped to a lower high, we got a dip, popped to a lower high. So writing's on the wall, that same type of overlapping, chopping, grinding, grunting, laboring price action is screaming, we're going down. But again, I've been calling for this for months. I've had that potential $50 target for a year or longer when I thought this was going to go to 50. And long after this action, kind of resistance turned support, we broke it. That's why I was expecting to go to 50 and we stopped midway. So latest price action overlapping just like before. Series of lower highs, overlapping chopping. Series of lower highs, overlapping chopping led to what? Lower low. So what's next? Lower low. So any rally should be sold, be in a position of authority on any type of bounce. Even last week when that started bouncing, I said definitely be in a position of authority because I'm expecting this to get reversed and more downside. So I like the Blake below 60, set an alert. Black gold Texas C closes below 60. That's a good shorting opportunity to start targeting your extensions lower, which puts us right around 54, 52. 52 overlaps with the bigger picture and basically 50. The good news is, Emil, once we get down there, this is a good long opportunity. Because why? Oil cannot handle being below $60 a barrel. Drill, baby, drill is not conducive to drill when prices are below 50. It needs to be 60 and above. So why is that important? Because if we get down here, I'm expecting it not just to sit and grind for weeks and months and maybe just go sideways for a year down at these lows. I'm expecting when we get down into 50 or lower, it's going to want to pop and go right back to the 60s very quickly. So in closing, close below 60, great shorting opportunity towards 50. Once we're in 50 and lower, then it's a great long opportunity because oil cannot survive below $60 a barrel. It's not price conducive to them drill, baby, drill. It has to be 60s and above to make enough money to drill, baby, drill. Got it? So I'm looking for the push lower and salivate country for that baby to go popping very quickly. So let's just say we see it below 50 bucks a barrel. Eric and anyone out there? Then it'd be conducive to buy some call options, many ways to play it. UCO, USO, there's many ways to play call options on that. Trade futures. But I would look for that dip below 50. I would expect a quick response out of the 50s and lower, shooting back into the 60s. That's quite a move. When you're down here in the 50s or lower, and you're going to get into the 60s pretty quick because drill, baby, drill can't survive down there. They have to be in the 60s and higher. And this technical picture is screaming a new lower low, which is below 55, aka $50, 52 and lower. Anything lower than 50 is screaming a buying opportunity for that quick reversal to get back into the 60s. Gold, it's never going to stop, right? Gold's just going. Well, with the world the way it is, credit card debt high, loans on cars that are likely to go defunct. We got a lot of problems. Commercial real estate. We are 37 trillion and counting. I mean, this picture is not appealing. Almost into 38 trillion. Look at our obligation of spending versus what we're bringing in, 2 trillion shy. Anybody that spends 2 trillion more than they make can't do this forever. So you see why it's a big short on the dollar. They're just going to keep printing money, throw more and more money at it. And the value of the dollar should continue to go lower when the world can see this and say, yep, they got 7 trillion in spending and 5 trillion in income coming in. Something's amiss. Credit card debt is way, look at that. 1.2 trillion. Ouch. That's not good. So this is why at some point, Elizabeth, I'm coming to join you, honey, is going to come. But remember, the markets can stay insane a lot longer than we can stay solvent. So what does that got to do with gold? That's why gold has been pushing it. Gold actually went higher than I thought it would go before we get that pullback. But this parabolic move cannot continue forever. It's going to want to come back. So I'm just cautiously telling you, long term, we're going to 5,000. No ifs, no buts, no ands. Gold, could this thing just keep ripping to 5? Sure, it's possible. But after that parabolic move, we do need a correction. I've been saying it for weeks now, maybe even months. And I said it over here, it happened. Well, maybe it's this market correction and then everything sells off into October. And then we get the year-end Santa Claus rally. But all I can say is, Harold and others, James, anybody that is trading gold or storing gold, by no means, 3,800 is still a steal when it's going to 5,000. But we're due for a few hundreds of dollar correction. I was thinking it might do it from here. I looked at the extensions and said, during this overlapping chopping area here, I was looking for that big down move, as you well know. But don't write this off as it's not going to happen. Or we could easily come back to the Magic Fibo. We haven't done that in a long time. And that would be a good $500 decline to get back toward the Magic Fibo. So even with this parabolic, never stopping, just keep buying, it's never going to stop. And you already told me it's going to 5,000. No way we can get a pullback. Yeah, way. And when it happens, perfect opportunity to add to your position. Fair enough? So be careful. Maybe this is the beginning of something that we start fizzling out or just continues, but nosebleed section eventually says we keep breaking extension after extension after extension. We need a bigger pullback. And the last time we had one was way over here in that April into May. Fair enough? So could this lead us from, maybe an October pullback, continuation, maybe October, November pullback? We shall see. But I would be very careful. Short-term call option trading. Every Friday I buy gold call options. I've been making a killing. Well, I'd be a little leery because this thing is overdue for a pullback. Same thing with silver. It's parabolic. It's just going and going. I mean, you look at that. We've been talking about this for a very long, actually in this one, talking about that for a very long time. I was the biggest proponent. I said all year, silver is an underperformer. It's one of our better opportunities. And this thing is up over 50+% for the year, much less where we were when we talked about this. I gave you that 35.41 target a couple of years back. We surpassed it. Where's the next target? 60.70. That's where we're headed. But we need a pullback. A great area to pull back is we still haven't broken all-time highs yet. So I'll come back over here to the charting platform. And we haven't broken all-time highs yet. That's what I still mean. Silver is underperforming. Gold's already ripped past all-time highs and made new highs numerous times. And it reached extension after extension, pushed the 1618, pushed the 272, pushed the 2618, and is pushing toward the 3618. Notice silver versus gold. Gold broke all-time highs and has just been going parabolic and ripped past all of these. Up 272, 1618, 272, 2618, pushing toward that 3618. That's it. And look at measly silver. Silver has not even come close. So what if silver catches up? We'd be pushing toward that 148 target. Now you can see why my $60/$70 target, which is a guarantee. There are no guarantees, but this is one of them. In my humble opinion, we're going here, but we're likely still need a correction before we just keep going straight up. Anything is possible. Yes, this is where we're going. Yes, I own silver, and SLV is going to go to 60.70. No ifs, no buts, no ands, no exceptions. But we still need a correction. Notice this big monthly candle now. What is it doing for silver? We long since closed above the 618. Now we're looking to close above that 786. And this month ends today. A likelihood we end up above that level with the candle body looks good. Amen? Yep. So Harold, what does that tell us? If you don't own SLV or some sort of silver, maybe you should buy some because we're going where? 60, 70, and that is conservative. Very conservative. Check it out. And today is screaming, well, weeks ago, even months ago, we closed above that 618, that 34 price a few months ago. See it? Closed right above there. That told us we're going up to 53.60. Well, I'm giving you 60/70. That is the key. That's where we're going. The question is this breakout going to go straight up there, or are we going to get some sort of pullback? Typically, after a vertical move like that, silver historically gets a pullback, rips, pullback, rips, pullback, rips. And even during the period where we went ripping to all-time highs, we did rip, we got a little pullback, we ripped, we pull back, we push, we pull back, we push, we pull back. Look at this thing. We haven't really pulled back in quite some time. So is this going to continue? Sure, it's going here. But all I can say is if we do get that pullback, keep adding to your position because that baby is going to go. And right now we're in the 40s. We were talking about this long time ago that we're going to go up here. So we're en route to reach it. Could this thing keep going without any major pullback? Sure, it's possible. But again, if it does give you a big pullback, keep adding to your position because what if, William Bruce, that silver decides to catch up with gold? Not only would it have to rip past this, it would have to go to 272, 2618, start pushing toward the 3618. And look at where that target is. 145. Wow. So 60, 70. That's pretty conservative, is it not? That's real conservative. If it catches up with gold, we're going to be pushing toward that 100 to 150 range. What are we talking about? This here. Gold ripped past the 2618, pushing toward the 3618. SLV. We're not even at highs yet. We haven't broken out. But if we start pushing the 272, 2618, start pushing toward that 3618, look at your price. 100, 150. Wow. That's impressive. That is extremely impressive. That we could go from 40 to 140. I like it. So needless to say, gold and silver are your traditional trusted investments, knowing silver is extremely undervalued in relation to gold's run. What else? Remember, Bitcoin. We're in a critical juncture right now. And do we break out or do we get another correction? Right? Do we break out or do we get another correction? Well, off the recent high to low, we're testing that 618 zone and being rejected at the moment. So keep an eye on this support zone that we don't hold it. We're likely going to go breaking lower toward that 105, 104, maybe even toward closer to 100 down here. Be careful. But if we can break this 116 to 120 area up here, I guess it's 115 to 116, 117, that zone, I'll stretch that out for you. What is that from? When we start looking at this, I guess I can fix that box here. We're testing it, but we start closing above that 116 level. That's what I want to see. And this prior swing point, 118, 117.9, 118, we get clear of that hurdle, then it's game on for Bitcoin to go ripping. What did I say the other day in our write-up? BTC pullback opens Mara November call opportunity. Interesting. And let me see if I can pull that up. Should have had that up earlier, but I didn't. But it dipped below $1 a contract. So what did I do? I added to my position. That November 20 Mara call, and I'm looking for opportunities for this thing to go ripping higher. And let's see if Bitcoin gives us a pullback. And of course, Bitcoin pulls back, Mars is going to pull back. And I would look for more opportunities to add to my position. So I talked about putting some junk bids in there. Hopefully you had an opportunity to try some. You were sitting pretty after yesterday's pop. It went up beautifully. But let me check today's little pullback and see how we're doing. Let me log in 1 second. Just about open. My computer restarted with updates. All righty. So Mara is trading right now that November 20th, November 21, 2025. That's the November contract for the $20 call option. Mr. Tucson is up at $1.77. I was able to get in below $1, so I'm almost doubled already. So could we still have an opportunity to get into that? Yes, right? If Bitcoin does not go breaking out and we get another little pullback, that's just an opportunity because my call option's out into November. And I expect as we dip into October going into November, crypto is going to go ripping. So I'm not trying to tell you this is a guarantee we are going to make a new low. We start clearing the hurdle, then that Mara call option should start ripping higher. And remember the rule, when Bitcoin reaches 130 and pushes toward our long-term target 150, 170, then the miners like Mara ought to start just ripping higher. Look at that run yesterday. This baby dipped below $1 and went up to like $2, and a little dip today to $1.77. That's not bad when I was below $1 here from last week. So where are we shooting for? 22, 23, high, low, up in the zone. We're testing it. But once we start clearing these little spikes, we start clearing that $18 to $20 range. Then we start targeting not only 22, 23, 25, but remember what Mara does during crypto winters and summers, bull cycles. Last time was over here. When Bitcoin reaches a certain dollar value, it makes these go exponential. And look at what Mara did. It shot up from the single digits up to 50s. Then we dipped into, mid-year, and then we had the last surge up to 80. Am I trying to tell you Mars definitely going to 80 or higher? It has the potential. All I can say is all my shares I own in Mara and my options, call options, when this baby goes ripping and Bitcoin is pushing that 130 toward 150, this thing ought to go parabolic again. And what's the definition of parabolic? This thing should go shooting to the moon. So conservative target, I would think, would be this 50 to 60 plus dollar range. Aggressive target's going to be 100 and above. Let's see what happened, what Mara does when Bitcoin hits that magical level and the profit margin goes through the roof for these miners. These things ought to go parabolic. And the good news is we haven't done it yet, right? We have not done it yet. This is the last time we went parabolic during the Bitcoin halving. We're in the midst of that now, and we haven't gone parabolic yet. So remember where we started talking buying this. You had an opportunity to buy this thing below $5. Not too shabby. We talked heavily about it when it was in the $8, $9 range. Beautiful. It spiked up into the 20s, pulled back down several times. That's not the parabolic move yet. Bitcoin has not reached that 125, 130. And as it moves from 125, 130 toward 150, that's when this thing should go parabolic. So I'm here to basically be a tour guide. So when I see this thing go ripping higher, where's it going to go? I would think at least in the 50, 60s area. That's conservative-ish, right? From the recent high to low, the 618, 786 zone, the 52 to 65 area, kind of that little green box there. That would be my conservative target. But I don't care about any of this. Emil? Ian? It's when Bitcoin reaches 130, starts pushing toward 150 to 170, etc., that this thing goes parabolic. And if it just goes ripping up into this area, what am I going to do? Sell, 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 sell. Sell all of it. But if it whimpers out and Bitcoin's pushing 130 toward 150 and we're barely struggling to get into this zone, then it's still a huge turn on your investment. From $4 if you got in that early, or 8 to 9 where we're really discussing in great detail, boom, that is potentially 4, 5x plus. Amen. This is not off the table. I just want to know when it goes parabolic, do we get that same type of run? And you know how I do that little tool when we look at arrows and we say, well, when this baby went parabolic, even after its latest pullback to its high, it made a move like that. So what if we do that now? That puts us just above that target, but shy of the 100 target. All we need is that last little parabolic move, and we haven't had it yet. So no buy, sell the whole recommendation, but I do own Mara, hundreds and hundreds and hundreds of shares, and I'm looking for this thing. I'm up big already, more than doubled, but I'm looking for a lot more before we're done. And when do you sell? When Bitcoin rips past that 130, pushing to 150, that's when this thing ought to go ripping. I mean, just unbelievably ripping higher. And in closing, if Bitcoin continues to break out, Ethereum should do the same. So we're kind of in a danger zone of testing. We're at a lower high after we did break out just a touch. And right now we're kind of holding. Is that the end of the three-wave correction? A little A, B, C, and we're ready to go blasting off. Well, the big picture, just like Bitcoin, it should give us more upside. Ethereum should do the same from the prior all-time highs to the low correction. We took out the 618, we took out the 786. So Harold, in my humble opinion, we still, Eric, have a 75% chance we're going to 55, 70 plus we're going to 6,000. And if this thing really gets started, maybe we go popping a little bit higher and maybe push toward that 7,000. All I can say, if we start pushing 7,000 or higher, this ETHU, which I own a lot of shares, is going to go parabolic again. And remember the conversation recently that when Ethereum made its bottom here, I talked about, well, when Bitcoin starts to make its run, Ethereum's at least going to go back to the 4,000 range. Right? We kind of tested it, and I said it would at least go back to that 4,000 range. That was a minimum. We did that and then some. But I said at that point, when we were down here in April, that I said this is a great opportunity as before we get to the end of the year, Bitcoin's going to make that run and Ethereum would at least go back to 4. And if it did it, this ETHU was going to run between 160 and 200. We went up here right at 190. That high was 188.73, it looks like. Beautiful move. I'm not done. I still think there's more upside. Could we get up here to 280, 300? If Ethereum runs toward that 7,000, I can't imagine we're not up here in the 2 to 300 range. What if Ethereum only goes to the 55, 6,000? I think we'll be between that 2 and 250. Amen? So back when we discussed this, we talked about when it was before the splitsy here, before the splitsy, we talked about buying it at $4 and it went from 4 to 12, tripled the money, took that money out, used it to buy more, and this is the market's money. So now after the splitsy, they made the prices a lot more expensive and you have less shares of it, but I'm still up big on that move, Harold, after the market's money on market's money. So when is it time to unload these? When Bitcoin starts ripping and we see it pushing and Ethereum's pushing that 55, 6,000, 7,000, etc., it starts pushing that. That's a good time to unload that. And if it is going to go there, which we have a 75% chance, we're going to go to 55, 70 plus, we're going to 6,000. So as we push 55, 6,000, we should be above 200 to 250 area, in my humble opinion. And if we can go breaking 6,000 towards 7,000 or higher, that could potentially break your 250 and start pushing the upper 2s to 300 range. All right, just like we pegged this one, it would move at least a 618786 retracement. If it moved toward 4,000, well, we got a little higher than that. So if we can go 55, 6,000, should put us somewhere between 200 and 250. If we can push the 6,000 toward the 7,000 and higher, then I think it's going to push the 250 toward the upper 2s to 3s. Got it? All right. So circle the wagons. Be careful. This is not a given. We're going to go breaking out. We could get that seasonality where we actually get a little bit of a pullback. All right, this is the weekly. I'm just stretching it out for you, but we could potentially get that pullback. And here's the daily. We're right in that danger zone of rejection. High, low, lower, high could lead to a lower low, which again, we gave you the targets. So if we break above that 67.20 short term, we'll be targeting 67.40, 67.50. And we break that, we go up to 67.76, 67.90. I definitely think this is not the end of the blow off top. Remember, we talked about it going to 6,600. This is blow off top area, but I don't think it's finished. I'm looking for that Santa Claus rally going into the end of the year. Fair enough? And this may give us a pullback. Even if we get the bigger pullback, that's just a great buying opportunity going into the last part of the year. Quarter number 4 starts tomorrow. We're going back through earnings season. We got another FOMC in October, which is the end of the month, I think the 29th. And then we got another one in December. See if I still have that open. Yeah, right there. October 28th and 29th, and then December 9th and 10th. So between October, November, December, we might get a little bit of a pullback. I would love to see it. I love pullbacks, pullback, buy the dip and rip. So could it be FOMC that gives us something and starts us off where they cut interest rates and they maybe surprise or do something the markets go ripping on? In general, rate cut cycles are not bullish for the market. Have we started in a rate cut cycle, or is this another one-off like he did last year? We shall see. Keep an eye on it. but I'll leave you with our famous view, and that's the DGS2. I guess they won't update this till next month. We did cut rates, so we should be down here near this green line now, that Fed fund rate. But let's see if they update it next month. That's probably what they're waiting for. And this is the current rate, so this pink line should be sitting about right here. And we got a little wiggle room, so if we cut in October, we're getting closer and closer. So if this blue line, which is your Fed 2-year maturity rate, right, Treasury maturity rate, if that baby starts ripping up near this Magic Fibo line and this 3.8 area, which is where 3.6, we go a little higher to 3.8 as we move toward the end of October, and we're sitting here, the cut would bring us down right to where the 2-year maturity rate is, and that could be disappointing where he can't cut rates. Big story, and I'm finishing up, is the Fed doesn't make the rates, they follow. So when the maturity rate runs off, the Fed raises rates. Go out to a higher time frame. When the maturity rate crumbles, the Fed cuts rates. Raises, cuts, raises, cuts. And notice what this has been: COVID, 2007 financial crisis, dot-com bubble burst, et cetera, et cetera. So that blue line tells us everything we need to know. And if this baby, as it started to bounce a little bit since they cut rates this last time, again, this Fed rate should be down here, and we're getting closer and closer. So if this thing runs into October this next month and it runs up toward 3.8 or higher, and our Fed rate is sitting here, he really can't cut it a quarter point because he's not going to do that and cut below where the rate is. Right? So with that, I'll say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor. So this October Fed cut is not a guarantee. If this baby fizzles and start pushing lower, then yes. But if we start ripping higher toward 3.8 or so, remember, we're not here now, we're actually there. So if we cut another quarter point, that would put us near this second green line. And if we rally toward that line, he's not going to be able to cut it. He'll come up with some excuse. Well, tariffs, blah, 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 inflationary pressure, something, 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 whatever it is. So we'll keep an eye on that as we move into the end of the month and we start fourth quarter. But keep an eye on our big trades like Tesla and TSLL, the VIX and UVXY is what we had talked about. So please review the archive. And then, of course, when Bitcoin does make its run and our Bitcoin strategy continues, keep an eye on Coinbase. Actually, I have it in our Ninja Trader here. The CONL is to Coinbase like TSLL is to Tesla. And I'm looking for this to go breaking out as Bitcoin makes its run toward all-time highs, pushes toward our target. I expect Coinbase is going to run and make some new highs. We have all this on the charts. So you can go to your drawing tools, Fibonacci retracement, and from the high to low, we can see our extension is up here at 470 to 526. We're going there. We rip close to it. We got another pullback. The bias is as Bitcoin goes ripping higher, we're going to go up and shoot for that 475, maybe 6 plus as a potential target. And if that happens, where's coin going to go? CONL. It's going to go much higher. So I will stretch that out and give you the bigger view. But we expect this to go higher. Actually, I'll pull this down. And the targets, let me go to a lower time frame to give you an idea. Let's go try a weekly. And from the recent high to low, We were en route to that 60, 83, 91 target. I still think these are viable targets up here. We did get another pullback, but remember from the low to the high, we're holding that 618 retracement zone. So what are we looking for CONL do along with the underlying Coinbase to go higher? And if Coinbase reaches its targets, then CONL should reach its 80, 90 targets. Fair enough? Any questions? But we got all these Fibonacci extension retracements we use all in the software ready for your viewing and using pleasure. So with that, we want to say good luck, God bless you, may the pips be with you. I'm humbled and honored to be your mentor and instructor, and join us again tomorrow. That's it, and that's all.